Okay, let's get started. Let's go right into the stock market technical analysis. I'm going to go ahead and go through the broad markets. We'll see where we're at. Big week today because we have more large cap tech earnings, and we also have the Fed on Wednesday. So I think Tuesday we've got some earnings, and I think on Thursday, I think Apple reports on Thursday. We'll take a look at that. Let me flip over there to mega caps. Apple. Yes, they report on Thursday, and then Tuesday we've got Amazon, and there's maybe one more. So large cap tech earnings and Fed. So big week today, or big week this week. All right, let's get into the charts. So we've got triple Qs, and this is our tech sector. Again, I always start with the tech sector just because it's the most heavily weighted sector in the S&P 500. So because it's such heavily weighted, where these tech stocks go is where the market goes. You can pretty much have the entire market doing something opposite. If these large tech stocks are selling off, they're going to put a lot of pressure on the indices. So triple Qs, we rallied into that resistance. We did hit it. So you can see here, this is a big sideways trading range right here. I've got it marked in green, but big range there. That was a distribution range. We saw, we basically saw this thing chopping up, down. You can see lots of moves there. And it was preceded with negative divergence. All right, we had momentum just dropping. This looks like this was a topping pattern, okay, this price action. So I'm treating it as such, all right, it still remains a topping pattern. We broke down, all right, as expected. And we're back testing. All right, that's all this is. This is a back test. Markets don't go straight down, just like markets don't go straight up. All right, they call it fall the slope of hope. All right, and you just like you rise a wall of worry, you fall the slope of hope. So markets come down, and then they give you some hope, and it keeps buyers and longs in there. Then they flush down. Okay, eventually, after you get enough of that, you start to get panic selling and people throwing the towel. And that's where you see really like that's where you see kind of a market crash where things are just dropping and plunging and there's really no more rallies to be had. Typically, that's going to signal the end of a down move, not the beginning. So, when I put out a video or I put out a thumbnail saying, oh, markets are going to crash, what I'm talking about is not necessarily that we just drop here and then ultimately just flush like that. That typically doesn't happen. I mean, that's very, very rare. You have to have some sort of black swan event for that to happen. No, what that means is basically we're going to go like this. We rise up on some hope, then we make another leg lower. And the thing is, I don't want to be putting out videos, market's going to crash when we're down here like this, all right? I don't want to put out, I'm trying to anticipate the future, not what's already happened in terms of price action. I don't want to just point out, hey guys, markets fell a bunch. There's no value there. That's just me following price action. So what I'm trying to do is anticipate what's going to happen next, which I view as a rejection right around this area. Now they might pop this range. I can see them doing that. When I say they, market makers, algos, they might pop it just to run some stops. So maybe look for, maybe an intraday pop or something like that. I don't think we're heading back if we head back to the top of the range, that's not something you'd want to see as a short, all right? We start entering this range and start creeping up in, working our way towards the top, then ultimately we're probably going to make new highs, and there's just not a lot to trade against in terms of a short trade. I don't think that's going to happen, and I think that the most that'll happen is maybe they pop this range just a little bit, and then ultimately we turn down and start to work our way down to the next target. Right now it's about 402.75, and then we got the 200-day. The 200-day is kind of moving up, so we'll see where they come into play, but I do think we're going to hit that 200 simple moving average on the triple Qs. So if I put out a thumbnail saying markets are going to crash, that's because I'm anticipating this. If this happens, I will have been right on that call, but it doesn't do any good to put out a thumbnail saying markets are going to crash after they've crashed or after they've, and it's not even really a crash. I mean, ultimately, this would be a move down. I wouldn't call it a crash, but ultimately, the more we go down, the more the dip buyers are going to be defeated, and that will lead to, kind of a flush out move where we will see capitalization selling. That often signals the end of a downward move. So again, I don't want to put out a video or a thumbnail saying markets are going to crash at the end of a move. I want to put it out before it's happened so that there's opportunity there for anyone that wants to take it. Nasdaq futures, you can see we could go up a little more. You can see the futures resistance I have is right in this area. It's about 1850, anywhere from about 1850 to about 1800, because you can see there's a little wick right there. So it's a little zone of resistance. So I could see us popping up a little more. If futures go up a little bit more, then maybe the triple Qs would kind of like pop into that range and run some stops. So that's it. That's all I really see is kind of a move into resistance before the next leg lower. Again, still, I think we could still be bear flagging, and that puts us down, again, measured target, somewhere down here, down near the 200 day. All right, so I'm still calling for that. We have to just kind of wait. Likely it'll get started on some of these earnings reports. Maybe Tuesday, after the bell, we'll have a bad earnings report and they'll start to gap down. Okay, so let's go through these mega cap tech stocks. Take a look. Amazon reports after the bell on Tuesday, sitting kind of right there at resistance. Now, yes, they could pop it up and do a back test of this trend line. You can see support. You got this bearish rising wedge. You broke, so you could back test on earnings. Maybe gap up right after earnings. If you gap up right into resistance, that would be an objective area to short. I don't know if it's going to do that, but if it does it, that's the objective area to short. Again, what will seem like the most bullish moment in time after earnings on a gap up would actually be probably the best opportunity if you're long to maybe sell your longs, and if you want to short, maybe to short. So again, if it does that, that would be objective. Otherwise, we're just sitting basically right at resistance. They popped it today, but they're selling it down, and it's just right there. It's just sitting at my trend line. So, we're at resistance, and earnings coming up. It's kind of a crapshoot. If they gap it down, it's probably going to trade down to this trend line 165.75. That's kind of support, and then ultimately I think it breaks. But that's it on Amazon. Google already reported, and sure enough, just like I said, right after the earnings, when it opened, if you sold at the open right after earnings, that was the move to make, because ultimately this thing is down roughly 4% from that opening print. So right after earnings, nothing but sellers. And the selling is continuing today. Now again, there's this channel right there, and you can see this kind of top range of the channel. And basically we're coming into that channel, so that might act as support in the short term. We'll see. I don't think so, though. I think they're going to just slice right through this channel and start to head lower. But again, it could be support until it's broken. So keep an eye on that. Microsoft also already reported. Again, same thing. Same thing with Microsoft. If you sold right at the open after earnings, that was the most objective time to sell because there's been nothing but selling. Ultimately, this thing is down, it's down 2%. It was down almost 3% post earnings. So you got to read into that. There's been nothing but selling after the earnings. And that's what I talk about. The big moves up after hours, that's really low liquidity. You don't have, the market makers aren't in there. The big institutions aren't in there moving positions around post earnings in the after hours. They do it in the regular session because they got a lot of money to move. They need liquidity. And what have they been doing? They've been selling. That's why we've been moving lower. Meta, all right, earnings, post earnings, this one rallied a little bit post earnings, but again, this thing after hours, it was all the way down here at 401-ish, so it kind of filled that gap. So they rallied it up. Resistance, again, about 453-ish, and then support would be that gap at 402.50, kind of in the middle right now. So I don't know which way it's going to go, but ultimately that's resistance, and it has an island cluster top. So I think this thing's put in a long-term top. By long-term, I'm talking probably 6 months to maybe a year and a half or so. Could be longer, but ultimately looks like a long-term top on this big island cluster top. And sure enough, still holding that gap. NVIDIA, they report a little later. They report towards the middle of May, so we've got a couple weeks before NVIDIA reports. So the market, it's hard to say if the market's going to really sell off. I don't know. We might get the selling started, run down, hit those 200 days, kind of hang out, and then run into NVIDIA, and maybe NVIDIA gaps up or something. I don't know. NVIDIA, I don't see anything that looks great. I mean, you've got momentum moving lower here, but you also have price moving lower, so there's no real divergence that's really showing up. This was a divergent high here, but I don't know. We could pop up and make a new divergent high. I don't see enough here to tell me that this is like a screaming short. And this one does need to break. In order for the market to really start to break down, we do need to see this thing break down. So we're going to keep an eye on that one. And then Apple, they report earnings on Thursday. This was the most bullish chart, pretty much, because look, big bullish divergence just showing up on the momentum indicators, and you kept dropping lower, but they're divergent lows, and boom, they're rallying, gapping it up today on nothing. I think just some, basically nothing. But this is definitely the most bullish chart, and we have earnings coming out on Thursday. Now, is it bullish right here? I don't know if I'd want to be long ahead of earnings. I think I'd probably just wait and see. But again, we're seeing this game of whack-a-mole. This is what we see in these. Either the market makers or the institutions try to keep the markets held up by rotating money in and out of these mega cap tech stocks just because they're so heavily weighted. So you can see Tesla's up huge today, Apple's up, the rest they're selling, so they're selling the ones that popped up, they're buying the ones that were down. All right. So, that's basically it. And that's why the markets, the triple Qs haven't really gone anywhere. Now, Tesla doesn't move the needle nearly as much. Microsoft's, a big heavily weighted one. But here's Tesla. Boom, big gap up on some over-the-weekend news. It doesn't matter what the news is. What really matters was the chart setup. You can see I had it kind of scribbled out. Bullish divergence. So, this was a divergent low. And I talked about this in my videos ahead of earnings. I said if I had to pick a direction, I'd want to be long because the charts were set up bullish with this divergence. Sure enough, boom, gap right to resistance and broke it and gapping up, and very likely, you got some resistance up here at 206.92. So yeah, I'd say it's very likely you're going to run up there, and you might hit that 200 day, and then we'll see. In general, there's no trade here unless you were long. Okay, XLF financials. You can see here on XLF, again, bearish rising wedge right there, negative divergence, broke, and, I think we're just seeing that kind of wave up. In general, I think we've got a downtrend. We do need to start to make lower lows, but in general, it looks like we've got lower prices, and we're just kind of sitting there. So again, I'm looking for that push down to make new lower lows. And when I look at these different stocks like JP Morgan, you can see filled the gap right there, and it's virtually just got nowhere. Extremely tight trading range. So this was just kind of waiting for, the large cap tech stocks to clear out. So yeah, we've got just a really flat range right there, sitting right at resistance. And then Visa, another kind of major player, kind of doing nothing also. Earnings came out, they popped it. This was earnings post-market right there, and sellers just smashed it down. So that's kind of the name of the game that we're seeing across the board on a lot of different stocks is post-earnings. They're popping it because, again, these companies know how to manage earnings. They come out and they offer dividends and they do buybacks. But ultimately, they're some of these growth stocks they're slowing, and that's kind of what it's doing. And so sellers are selling. They're coming out and selling on the post earnings pop. So there's selling, and we're just kind of down here. Again, I think we're going to push down to the next level of support and the 200-day, 255-ish, somewhere right in there. Berkshire Hathaway is another one. These three stocks make up the financials basically. And you can see, boom, big bearish engulfing, and that's held as the top. There's another bearish engulfing. So, yeah, I think we are going lower. And, yeah, even on this one, you've got negative divergence here because they popped it up and made a new high there. That's a divergent high, and nothing but selling. All red candles ever since that divergent high. So, yep, slope of hope. Eli Lilly, they report after the bell on Tuesday. And as far as I can tell, it's a little tricky to say what's going to happen right out of earnings. We're sitting on support. All right. We have an uptrend line right here, and we are just sitting right there on support. Resistance is up here about 794-ish. That's kind of the top of this range. We do have negative divergence, but they could do another. They could make another divergent high. Earnings might come out, boom, they pop it up in here, make a new divergent high, then it sells down. That's completely possible. So I'm going to sit this one out. I'm not going to have a position on this into earnings. We'll wait and see what they want to do. Now, they might gap it down and just break support. And if they gap it down big, it's not going to be very objective to jump into a short. So, what I'd prefer to do is to, if it gaps up, I'll probably just not do anything and let it come back down to the trend line and ultimately wait for the break of the trend line. If it gaps down, I'm not going to want to just jump in short right at the gap down. I'll wait for it to rally back into resistance to short. All right. The negative divergence tells me it's going lower, but I don't know if it's going to go up first after earnings. Long trade idea, NTR. This one looks good. All right. You've got big resistance on the daily. All right. Lots of reactions. And we have a breakout and a back test. They undercut the trend line, but it held. And again, today up 3%, kind of gapping up. That looks like a pretty good impulsive price action to see off that trend line support. Also, this one, if you look at the momentum, you've been building bullish divergence for quite a while now. So this one looks very similar to kind of wheat, and it makes sense. This is a fertilizer company, so. But yeah, big bullish divergence. Breakout back test looks like it's that looks pretty good to me for a buy signal. The only thing I don't like is it's right ahead of earnings, but I mean in general, because earnings are on Wednesday, earnings are coming out next week. It looks like May 8th. Sorry. So here in a little bit. But yeah, looks like a buy signal to me. So we'll see how that closes. SMCI, this one has earnings tomorrow. Again, we have, ultimately, if you look, there's negative divergence right there. So divergent high. You had this bearish engulfing, but they kind of chopped through it. We're working our way lower. We've got a downtrend line to kind of watch. And we are, I don't know, they might rip this thing into the downtrend line ahead of earnings. Maybe post earnings, it hits the downtrend line. But this downtrend line, looks to be a valid trend line. And earnings coming out tomorrow. I don't know if it's after the bell or before, but likely after. And then I think we're going to push down. We'll see. Obviously, it's a big risk because, earnings causes large gaps typically, and especially in something like this. So it could go either way, to be honest. But if I had to look at the chart, it's telling me with the divergence, with the downtrend, that we're going to likely go lower. And to see it rallying like this ahead of earnings tells me that that's kind of a trap. I think we're trapping longs, Who's in here buying right ahead of this earnings, Probably retail money. So I think they're going to take the earnings and wipe them out. And here's a semiconductor ETF. I'm looking at the hourly chart here. You can see a downtrend line. Resistance, 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 resistance. And they're just kind of ramping it up into that resistance. So I don't know. We probably will hit it sometime today. But, that should be end of the line. It is resistance. Now, if it breaks out, we change, the technicals have changed. But until then, we're basically right there at resistance, and it's objective to short right in this area. It could go up another, 1% or so, or, 0.7% to hit that trend line, but we're pretty close. So that's really all I have on that one. And then I'll wrap up with wheat. You can see a little bit of a pullback today, but again, I like this one for buying the dip right now. We have a bullish falling wedge here. We have bullish divergence. That's a clear breakout, all right? That's a very strong breakout, increasing volume. I think that we have, this one is by the dip to me. So, we're seeing a dip today, down 2%. It could go down to here. I see some support down at 551. No guarantees, though. I'm not, I like buying it kind of right here and then, down to there and probably not below. I wouldn't want to buy it below 551. I'd probably just hang tough, and make sure it can hold that support. But in general, I think it could flag out for a little while, maybe work its way down there, and then continue higher. So I like buying the dip on this one. And that's all I got. I'm going to wrap it up, guys. Drop me a thumbs up. Check out the private member group. Link in the description below. Catch you on the next one. Bye.